Today, I'd like to talk to you about the relationship between risk and stock prices. January 6th was a dark day in the United States where we had some political unrest. And what surprised people is that the stock market, as measured by the S&P 500 index, went up. You can actually see that here on the right-hand side of this chart for the last few days, given that we're shooting this video on Saturday the 9th. And people wonder why, given all of the unrest, why did the stock market continue to rise? And I think it has to do with the definition of risk. Risk is uncertainty. Another word for that is volatility. How much can things change over time? And one of the things that happened the night of the 6th, going into the morning of the 7th, is that the election of 2020 for president was finally settled. And the market now has, as well as the country, stability. And there's predictability in the marketplace. And you can see that on Wall Street. This is a graph of the S&P 500 index, which is 500 of the largest companies across industries in the United States. And it's the value of the stocks. So when we talk about the stock market going up, it's with this index that we track it for big companies in the United States. But I want to add another index, which is called the Vix. And the VIX comes from the Chicago Board Options Exchange. And what it does is it gives us a sense of what's called the volatility of the marketplace. I will look at it, in this case, over the last month. And the idea is the line in red is the VIX and blue is the stock market. The line in red represents the VIX Index. And the VIX basically says when it's high, that there's a lot of uncertainty. And when it's low, there's a lot of certainty. And so the idea is when there's a lot of uncertainty, meaning I don't know what's going to happen in the future, then basically prices are depressed. When there's a lot of certainty, prices actually go up. And you can see the correlation over the last 30 days that when there's a lot of uncertainty, which is a big spike in the VIX, don't know what's going to happen in the future, market goes down. When the uncertainty level comes down, market goes up. And if you look at the last few days, you can see since January 6th that basically there's been a lot less uncertainty in the marketplace and share prices have been rising. I'm going to take the time horizon. I'm going to switch this to 1 year instead of 30 days, get the same idea. When the virus first hit back in March, in the United States in a big way, and we started to close down, tremendous uncertainty about what was going to happen, and then the markets collapsed. And I know it was a terrible virus, but as we started to understand what the impact of the virus would be, and as we got more certain about how things would look, the stock market has been rising. So as uncertainty has come down, the market has improved in its price. And this plays out over an even longer term basis. So again, this is a 5-year look. The line in blue represents prices. The line in red represents spikes in uncertainty. And so what we can see is that since the election is now resolved, that has been the primary reason why people are more comfortable buying stocks and the stock market has been rising.